Hey guys, welcome back, and in today's video we're going to be talking about what I've been up to in my $60,000 portfolio. A few weeks ago I talked about how I actually manage the portfolio, talking through the Excel model. Well, this is the first official monthly update on the YouTube channel. I do bi-weekly updates through TikTok and Instagram, but this one's going to be a little bit more in-depth because we have longer than a minute. So let's get into it. This video, we're going to be talking about the value of the portfolio as of 8/13 as I put together this report every Friday and send it out to my Patreons. So 60,457 is the value of the portfolio as of last Friday. With that value, the alpha generated for the lifetime of this portfolio is around 13.42%. When it comes to bonds, I want to talk about that really briefly because my target is 7%, which is based on the age rule, so 120 minus my age, but my actual percentage is 4.33. So the question is, am I adding to my bonds position? And no, I'm not really that bullish on bonds. This is more like a cash position to me. And if we do have a major pullback, I'll probably sell even more bonds and move it into stocks. Also, let's talk about those dividends that have been coming in. So for August, currently at 55 bucks. And the reason August is a bigger month tends to be because of Verizon and AT&T, and I believe JP Morgan all pay in the same month. So if we click into this, we'll see that a big portion of the dividends that already came in August were actually, like I said, AT&T, JP Morgan, and Verizon. So the rest of these are smaller amounts, but these are kind of my bigger players. If we go back to the dashboard and look at the overall dividend yield percentage of the portfolio, it's only 1%. By no means am I heavily allocated into dividend payers, but I do have a certain amount of stocks, AT&T, Verizon, JP Morgan, who do pay a higher yield. I also want to talk about the classification of stocks that I have in the portfolio. As right now, you can see the biggest percentage is towards fast growers, and I really want to just grow this number to closer to 40%, and I'll probably be taking it away from either bonds, as I said, sell those off, or taking down positions in slow growers. As someone that is younger, I want to really focus on stalwarts and fast growers. Those are kind of the two categories that I'm looking at, as stalwarts are growing their earnings faster than the average S&P 500 company, and fast growers can be more speculative, or companies like Amazon, which are growing their earnings at a pretty high pace, 15 to 20% or more. I want to allocate a little bit more towards these two categories. Slow growers, these are companies like Verizon that have those higher payouts, but over the long term, they may underperform as they're a little bit more conservative. Realistically, these are value plays where I think, okay, they're undervalued, but once they get to fair value, I feel like a lot of this money should be shifted more towards growing companies, which you'll deal with more volatility, or I'll deal with more volatility, but that's kind of okay in my opinion for the short term when you're focused on the long term. So we're talking 20 years from now. You can see not much has changed in terms of the market cap. I'm really heavily allocated towards mega and large companies. I do want to increase my exposure to mid-sized companies, so companies between 2 and 10 billion. Those can offer a lot of growth, or possible 5 to 10x kind of companies. If we look at the sector, I actually have increased my position towards technology. Really, my opinion on this is more around buying companies that you want to invest in for the long term. I think for a little bit there, I was trying to play across all sectors, but I understand technology companies and finance companies and consumer defensive probably the best. And that's kind of why I'm allocated more heavily towards these sectors. When it comes to basic materials, I would say then these three sectors, as well as telecom, I have a better understanding. Energy, healthcare. Healthcare is one sector that I don't have a really good hold on, and that's why it's a lower percentage. And this just really comes down to like my knowledge of the industry. Now that's an overview of the portfolio, but let's talk about over the past month kind of what I've been doing in my positions themselves. So what I've been buying as well as what I've been selling. So since that last video about a month ago, I've bought a little bit more Corsair, which continues to bite me in the butt. Kirkland Lake Gold, I bought more Google as well as Amazon, and then I've started to dollar cost average into Zillow. Also, the reason behind these buys, Corsair, I still think it's worth around 40 bucks. I just continue to add even in this continued down move that we see in Corsair. For Kirkland Lake, I wanted to increase my position to an uncorrelated asset. So being a gold miner and gold as an asset class didn't really have too much exposure to that. It's around 1.7% of the portfolio. Google, this is 100% based on their last earnings, and it was an absolute killer of an earnings. They smashed everything. And for me, Google is one of those positions I wanted to increase my overall exposure and get it around closer to 6% 6%, so a pretty big position in the overall portfolio. Amazon is one of those companies that they actually miss the earnings, but for me, any short-term volatility in Amazon is a long-term opportunity. It's already a bigger position, but it's around 6% of the portfolio as well. If you haven't noticed, a large percentage of my portfolio is in these big tech companies that are actually deceivingly growing really fast, even though they have huge market caps. Zillow did a recent analysis. This is a very volatile stock, but it's a very fast growing stock. So we may have some short-term pain here, but I'll continue to dollar cost average and build up that percentage to around 1% of the portfolio unless there's a really big bargain deal. I had fair value around 95, and that's why I'm kind of starting to nibble. But like I said, if it goes to like 60 or 70, that's when I would start to build an even bigger position. And then from the sell side, I sold some Square when it was around 260. And this was prior to earnings. It went up to around 280, but really it was Square. The concern was around PayPal and them having a decent earnings and getting killed. I thought Square might perform similarly, so I took a little bit off the table. And also as a percentage of the portfolio, I wanted to reduce it to around 6%. And what's crazy is I looked at my tax status basically, and the cost basis for those shares that I sold was around $16.22. Square is definitely one of the best investments I've had, and it really comes down to me buying it years back, thinking about the future and really the fact that I thought it was disrupting. It turns out it was a pretty good decision to buy some shares. Happy with that, and yeah, realized profit of $562. In regards to rebalancing or selling any positions, I'm selling out of my Alteryx position, which is pretty small, but for me, I don't have a super high conviction in this company. I've never actually used their product. I thought the space of data science and analytics was cool, but the past couple earnings calls, the management hasn't been great in terms of giving guidance or their decisions around not moving faster to a cloud-based solution. Also seeing a little bit reduction in the margins. I don't know. For me, it's just I would rather sell out of it. So I'd rather move this to cash and move it to a company that I have a little bit higher conviction in. Well, there you have it. There's the first monthly review of the portfolio on YouTube. If you have any feedback in terms of what you'd like me to cover in these monthly reviews, whether it's maybe more in depth into these companies or if you think this kind of high level overview is pretty good, let me know. Always down for feedback. If you want to see the real-time activity in the portfolio, the discount cash flow models or the investing guides, anything like that, make sure to check out the Patreon in the link below if you want to support the channel. Also, if you did enjoy the video, make sure to hit that like button and consider subscribing to Main Street Wolf, where we talk investing, stocks, anything to do with money. Thanks guys for watching and have a great day.